leading the way for the next generation of homebuyers. This is Real Estate Today.
Welcome back to Real Estate Today. I'm Gil Gross. This week we're getting ready to sell. And one idea that's gaining some popularity in the real estate world is seller-held financing. This is where the seller becomes the bank, and the buyer makes mortgage payments to him or her instead of a corporation. So how does that work? Well, to help us learn more about how the seller can hold the note is the note queen, Dawn Rickabaugh. She is the author of the book Seller Financing on Steroids, which has helped many sellers figure out how to become the bank. And you can learn more about her services, by the way, at notequeen.com. She joins us now in Real Estate Today. Hi, Dawn. How are you?
Hey, good morning. I'm doing great. Thank you.
I imagine that one of the reasons people are looking into this is that financing is kind of tough for people to get in some cases.
That's absolutely true. In the days when I was starting my little niche career, financing was easy to get if you could fog a mirror, and nobody was interested for the purposes of just getting a transaction closed. Really, the only people that were using it then were the ones who wanted to do some estate planning, deferring capital gains, and creating a nice retirement income at higher rates than they could get at a bank CD. Now, we just need these alternative strategies just to get deals closed these days.
Yeah, but, this can be a good deal, so let's get into it, because at a time when, let's say you're not, turning over the money to put it into another house, so at a time when investments are iffy and the interest rate the bank is giving you is just, microscopic, to be able to get a mortgage rate back on a note can seem like a pretty darn good investment. But people are wondering, well, okay, how do I go about this? Because it sounds, a little dangerous, especially with, the people that haven't been able to make their payments and all of that. So where do I start? If I'm a seller and I want to offer this to sell a property that otherwise might have trouble going, where do I start?
Well, a good place to start would be to buy buy my book. Actually, there's a free version on my website that gives an awful lot of information, because what a seller needs to do when they're going to become the bank is they need to put on a different thinking hat. Okay. Banks have whole underwriting departments. A seller needs to understand how to do their own underwriting, or they have to hire a personal underwriter, which is I often consult in that type of situation, because it's a very good question and a very good concern. Yes, it can be a phenomenal investment for many people. Not everyone's cut out for this, but for many people. Yeah. But the way you put the transaction together determines the strength of your investment and its potential liquidity. Like if you are carrying a note for a buyer and you ever wanted to sell your note, the price you'll get for your note, or if you can sell it at all, will depend heavily, profoundly upon how you put the deal together in the beginning.
Yeah, it's one thing for a bank to sell a mortgage to, some investors in Denmark or something, as they were doing, right. But it's another thing for just you to be able to do that. So you've got to be thinking about that. Or this may be a note that you're just going to hold for a long time. Although, again, that can be a decent investment. Look, everybody's thinking about the same thing. We're going to leave the technical stuff to your book. But people are wondering, well, what if the person doesn't pay? We've heard about banks with tons of lawyers not being able to get people out of a house being foreclosed on for 17, 18 months. So what about just little old me? What happens then?
Well, the first place, obviously the remedy for default is always foreclosure, but yeah. Going back to the underwriting, if you put the deal together in the beginning with the worst possible case scenario in mind, you will fare much better, and you'll reduce your statistical likelihood that you'll ever have to have that conversation. But the things that a private person doesn't have that all these large institutions have had is that there's not a big threat of a robo-signer kind of thing.
Right.
One person making the payment. You have the seller still holding the same note that was created when he sold the property. You've probably got a nice note servicer in there. It's nice and clean, and if you've put together the note documents properly and paid attention to the rules in your state, the risk versus reward is actually pretty good in most instances. I mean, I like to remind people that there's a risk in everything. There's risk in selling a property and carrying the paper, but there's also risk in not selling your property. And there's risk in putting your money in a bank that could fail. I mean, there's risk everywhere.
Well, I got to tell you, the first place I bought, I wasn't even planning to buy. I had like $1,000 in the bank, and I walked into a realtor's office to see if there were apartments for rent. And she said, "Why not buy?" And I said, "Well, because I've got $1,000." And she said, "You know what? If you're willing to take a lesser property as a starter house, you can get so much as a mortgage." And in this case, the seller took back a second, and that enabled me to buy the house with $1,000, and I built on the equity from that to be able to own everything I've owned since then. And that was a great deal for the seller. They sold an otherwise tough-to-sell house, and it was a great deal for me. So this is a real thing.
Exactly. I mean, in 2002, I bought a commercial building with 14% down, with 3 3/4% financing for the first 2 years, 7.5 after that. And they would not have, even if I could have qualified for a commercial loan at that point, which I could not have, they would not have taken it, because that was their whole retirement plan, and they were very happy with that, and it worked out excellent for me. And so there's so many, and since then I've bought a piece of property with 0% financing. I bought a single-family rental. Well, I thought it was going to be a rental, then I just turned it into a note. I bought it with owner financing, then I wrapped it and sold it with owner financing. And so my whole goal in life is to do everything without ever asking a bank for permission.
There's a lot that's very strong about this, especially for you sellers in a market where sometimes it's tough to sell, and you've got buyers who may seem to be well qualified, but the house isn't appraising or whatever is going on. Too much technical stuff for us to get in this short a segment, but as Dawn said, she's got a lot on her website for free, which is notequeen.com, and then a ton in her books that walks you through this seller financing on steroids. Dawn Rickabaugh, I thank you so much for being with us in Real Estate Today. At least we kind of put the idea in people's heads that this is an avenue that they can look at.
Absolutely. Thank you so much, Gil. I appreciate the opportunity.
All right, Dawn. Coming up, we're going to take your calls at 877-55 today. That's 877-558-6329.